Hello students, welcome back to my channel GK's Education. As you all know, accounting of share capital is going on, and in the previous video we did a very important part of it, four features of share. So today we are going to do another very important part, reissue of forfeited shares. You all know that the company always issue share to raise its fund, and when non-payment of some installments or allotment occurs, it has to forfeit the shares of the shareholder. And the forfeited shares, what it does with that, so definitely it has no benefit in keeping those shares idle. In many of the cases, the company decides to reissue those shares. So what is the accounting treatment, how this is done? We are going to do this in the video. Firstly, I would like to request, please like and subscribe my channel, as you will get all your doubts clear here in an easiest way. So please do like and subscribe. Let us start our topic now. Reissue of forfeited shares. The directors of the company can either cancel or reissue the forfeited shares. Means it is up to the director of the company. They can either cancel the shares forever or they can reissue the forfeited shares. In most of the cases, they reissue such shares which may be at par, at premium, or at discount. Means the company can reissue the shares, it can reissue them at par, it can reissue them at premium, or it can reissue them at discount. So there are few points which we have to keep in mind when reissue of forfeited shares is done. The forfeited shares may be reissued as fully paid, at par, at premium, or at discount. We can reissue the shares as fully paid shares at par, that means at the value, face value. At premium, we can if we are a good company, we can reissue them at premium also, or at discount. It may be noted that the amount of discount allowed cannot exceed the amount that had been received on forfeited shares at the time of initial issue. Now, the point is that it may be noted that the amount of discount allowed, it cannot exceed that level of amount which had been received on the forfeited shares at the time of initial issue, and that the discount allowed on reissue of forfeited shares should be debited to share forfeiture account. Now, two points are there. Number one point is that the discount allowed cannot exceed the amount already received. Means earlier, when the shares were forfeited, if they were of rupees 10, and the person only paid rupees 3 and did not pay rupees 7, for which the shares were we can say allotted, for which, for those 7 rupees, the shares were forfeited. So the discount can be up to rupees 3 only, not more than that. And the point is that discount will be debited to, no, it will not be debited to discount on reissue of shares. It will be debited to share forfeiture account. Means up to that extent, the share forfeiture account will be adjusted and used. Now, number 3, the balance, if any, left in share forfeiture account shall be treated as capital profit and will be transferred to capital reserve account. And for those particular shares, if any balance is left in the share forfeiture account, that will be capital profit and will be transferred to capital reserve account. Now, it will be more clear with the help of this example. A company forfeits 200 shares of rupees 10 each, on which rupees 600 has been received. Now it can allow the maximum discount of rupees 600 on the reissue. The company reissued these shares for rupees 1800 as fully paid. Now the journal entry will be first for forfeiture of these shares. The entry will be now for the reissue. Here the entry is bank account debit 1800, share forfeiture account debit, keep this amount, and then to share capital 200 into rupees 10, that is 2000. Now credit is given to 2000. Bank account will be debited to rupees 1800 only, as it has been issued for 1800, and the difference between them will be debited to share forfeiture account. Now the balance in the share forfeiture account rupees 400. 400 means earlier share forfeiture was debited with 600, the amount already received, and now out of it 200 has been debited. It was credited with that amount of 600, out of which 200 is debited, and the balance 400, that is 600 minus 200, will be transferred to the capital reserve account by the following entry: share forfeiture account debit 400 to capital reserve 400. Now the fourth point to be kept in mind is capital profit arises only if the forfeited shares are reissued and not on all the shares forfeited. So when the part of the forfeited shares are reissued, in that case only the proportionate amount of the balance that relates to the forfeited shares reissued should be transferred to the capital reserve. Means if 50 shares were there, only 50 forfeited shares we can say were there, out of it only 25 were reissued. So if any balance of capital reserve is there only for 25 shares, only that balance in the share forfeiture account will be transferred to capital reserve account. Now let us check this with the help of the example. Now see, it is example: 200 shares of AB Limited of rupees 100 each, 200 shares of rupees 100 each were forfeited for the non-payment of second and final call of rupees 30 per share. Out of these, 150 shares were reissued at rupees 60 per share to M. Now show the necessary entries. Now when the shares were forfeited, in that case, share capital account debit, share capital account debit 20,000, that is 200 into the total value 100 rupees, 20,000, to share forfeiture account to share second and final call. Now for second and final call, 200 into rupees 30, that is 6,000. So 20,000 minus 6,000, 14,000 will be the balance. That means the money already received will be the balance in share forfeiture account. Now when the shares are reissued, in that case, bank account debit to share capital account. Share capital account, only 150 shares are reissued. So 150 into rupees 100 per share, that is 15,000. And here bank account debit 150 shares into rupees 60 per share. 150 into 60, that is 9,000, and the difference 15,000 minus 9,000, that is 6,000 account. 6,000 will be debited to share forfeiture account. Now here the point comes of capital reserve. Let us note this working. Note, for 200 shares the share forfeiture account stands for rupees 14,000, and for one share 14,000 divided by 200, that is rupees 70 are there in the share forfeiture account. So for 150 for shares 150, 70 into 150, that is 10,500 are there in the share forfeiture account, out of which we subtract amount my already debited, that is 6,000. So 4,500, that means the amount, balance amount related to 150 shares only will be transferred to capital reserve. So the entry will be share forfeiture account debit to capital reserve account rupees 4,500. That means the excess of share forfeiture account transferred to capital reserve account. So this is how the entries are done and the points are treated. Now let us do one more example to make our doubts clear. Here, X Limited issued 50,000 shares of rupees 10 each at the rate rupees 12 per share. It means the shares were issued at premium, uh, payable as rupees 5 on application including the premium, that is rupees 3 is the share money plus rupees 2 premium, rupees 4 on allotment here, and rupees 3 on first and final call here. So 3 plus 3 plus 4, that is rupees 10 plus rupees 2 premium payable on application money, payable with application money. Now there are 50,000 shares, that is to be kept in mind. Applications are received for 70,000 shares, so the issue was oversubscribed. Of cash received, 40,000 was returned, 40,000 we returned, and 60,000 was applied to the amount due on allotment. All the shareholders paid the call money except a lottery of 500 shares. These shares were forfeited and reissued as fully paid at rupees 8 per share. Earlier the shares were of rupees 10. Now they are reissued at rupees 8 per share. The company does not maintain calls in arrears account. Now give the journal entries. Now let us check it out. First is bank account debit to equity share application account, rupees 3,50,000. How? For 70,000 shares we received rupees 5 per share, so 70,000 into 5, 3,50,000. Now the money adjustment, we are going it in a single entry. How? Equity share application account debit to equity share capital, as share capital will be credited with only the with the share with the we can say face value. 50,000 into rupees 3, out of 5 only rupees 3 were of share and 2 was 2 for premium. So 50,000 into 3 only for equity share capital, that is 1,50,000. And now to securities premium reserve account, 50,000 into rupees 2 per share for premium, that is 1 lakh rupees. Now to bank 40,000, as they told that 40,000 was returned, so to bank 40,000 and 60,000 was applied for the amount due on allotment, and rupees 60,000 adjusted for allotment money. Now 1,50,000 plus 1 lakh, 2,50,000 plus more 1 lakh, 3,50,000. So debit is equal to credit. Transfer of application money to share capital to premium reserve, adjustment made in allotment money in allotment account, and money returned also. So this was the second entry. Now equity share allotment account debit to equity share capital account, being the amount due on 50,000 shares at the rate of rupees 4 per share. So 50,000 into 4 being the allotment money due, rupees 2 lakh. And then for the money received, bank account debit to equity share allotment account, the balance received means out of 2 lakh we already received 60,000, so we will subtract that 60,000 money already adjusted, only the balance 2 lakh minus 60,000, 1,40,000 we are going to receive. Now equity share first and final call account debit to equity share capital account, being the amount due on first and final call of 50,000 shares at the rate of rupees 3 per share. So it is 1,50,000. 50,000 into 3. Now here the point comes, how we receive the first call money. It is bank account debit to equity share first and final call. How we receive? Now see, first call money was due 1,50,000 and he said all the shareholders paid the call money except the allotee of 500 shares. For 500 shares, call money was not paid. So the money due on final call was rupees 3 per share. Now 500 shares into rupees 3, which we did not receive, 1,500. So 1,50,000 minus 1,500, that is 1,48,500. So this entry, bank account debit to equity share first and final call account, 1,48,500. Now the shareholders share forfeiture entry. Equity share capital account, 500 shares of rupees 10 each. So the amount debited is 5,000. Now to equity share first and final call account, the money they did not pay, 500 shares at rupees 3 per share, that is 1500, which they did not pay. Difference 5,000 minus 1500, that is 3500. We will transfer to share forfeiture account, or we can say the money that has already been paid on these 500 shares is transferred to share forfeiture account. Now reissue of shares. It is said that these shares were forfeited and reissued as fully paid at rupees 8 per share. Now bank account debit reissue entry. Bank account debit 500 shares into rupees 8, that is 4,000. And now credit is given equity share capital at 500 shares into rupees 10, that is 5,000. Now difference between them will be debited. The discount will be debited to share forfeiture account, 1,000 rupees. Then share forfeiture account stands for 3,500 for 500 shares. 1,000 is already debited. So for 500 shares, excess 2,500. That means 3,500 minus 1,000. 2,500 excess is lying in forfeiture account. Now it will be transferred to capital reserve account. Share forfeiture account debit to capital reserve, 2,500 being the capital profit on reissue of shares transferred to reserve account. So this is how these reissue is treated while doing the questions. In the coming video, I'll be giving you more practical problems of to deal with, so that you can understand the topic reissue of forfeited shares in detail. I hope you are getting the points clear very nicely. So please do like and subscribe my channel. Thank you.